for movement, and that's exactly what we're going to be discussing here in today's session. So welcome everybody. I do hope everybody can hear me all right, see me all right. If your screen was fuzzy or something, you could either refresh or there's actually a selection for different resolutions. And you guys obviously can do that. It's in the lower right-hand corner. So if something looked fuzzy to you, obviously you could crank up the resolution. It changes resolution dynamically just based on your internet connection at that time. So I do appreciate you guys kind of chatting in where you're joining us from today. So city, state, country, whatever it is. Only in the United States do we actually put down like, I'm here, I'm there, like we assume everybody knows. So I am actually broadcasting today from I'm not at one of my homes. I'm actually up in the mountains. I'm in Flagstaff, Arizona, broadcasting from 7,000 feet up. It's cold this morning too. Like I'm like dressed for winter up here. I walked outside this morning, went for a walk before I actually traded this morning, and it was 53 degrees. I like it. I'm a mountain man. I'm going to grow a giant beard. I'm into it. So I like it. I do. So anyway, if you have no idea where Flagstaff is, it's way up in the mountains in Arizona. Snows up here. It almost snowed up here the other day in June. Literally, it almost snowed here the other day. We had hail. It was like 40 something degrees. Lovely weather for June. All right, with that, I like it. A lot of people tuned in today. I'm just making sure that we're all good. Ready, everybody ready? Okay, I have a lot to cover today. I'm going to beat everybody up pretty good on this one too. I put a lot of time, a lot of thought, a lot of energy, sometimes into putting some of these presentations together, and today is no different. So let's not worry about markets just yet. The big mover on the screen today, to me though, is bonds. Okay, bonds. It's a big boy move to the upside, 1 and 19 ticks. So it's just over a 1.5 move to the upside in the bond market. So let's get crazy. The S&Ps are it's a slop fest out there. Again, we're going to talk exactly about that. So I really think you guys will enjoy what we have in store for you today. I liked putting this one together. D0N DTE. So obviously, we're going to talk about some rapid gains. This is, in large part, we are going to discuss quite a bit about D0 DTE. If you're not familiar with it, if you've got questions on it, don't worry, we're going to cover them. By the way, I am reading the chat. People always ask me some real basic questions to begin with. So informally, allow me to say that, yes, this is live. Everybody always asks that question. Is it live? It's live. I was just looking at the markets a second ago. It's live. Okay. The other thing everybody always asks me is, can I ask questions throughout the course of the presentation? And if you see me like looking away or looking down, camera's over here. Okay. Your questions are over here. I am, as I said, I'm away from my my main office, so I only have 3 monitors here. I'm relegated to 3 monitors. What will I do? I don't like being on 3 monitors. At home, I actually, it just takes a couple more monitors. I don't need all these monitors to trade, but to run a broadcast like this gets a little bit more challenging. So yes, it is live, and yes, you can ask questions throughout the course of the presentation. And somebody asked in there, did this start soon? Yes, it already started. let me continue on. Let's not irritate too many people before I've even officially begun. It's that's usually a bad way to start things off, right? Anyway, let's get into it a little bit deeper over here. Risk disclosure. Look, I spent a significant amount of my career on the brokerage side, the market making side. I'm neither of those anymore. Copyright disclaimer. This is mine. This is not yours. The other thing, if you ever need to get a hold of me after today, which is okay, support@theotrade.com. We answer emails here. We answer upwards of 400 to 500 emails a day right now at TheoTrade. So more than happy to answer your email as it actually comes in. I do answer emails directly myself. Couple of housekeeping items. By the way, I got to change this. It says turn off Skype. There is no more Skype. They offed Skype. Turn off Telegram. Okay, shut the door. Definitely get rid of Facebook entirely. You don't even have to close Facebook. Just get rid of it. Phone. Okay, everybody got their phone. Phone on silent mode. Pick out the kids. The dog can stay. You took the time to be here, people. focus on being here. Now, before I go any further as well, at the end of this broadcast, stay with me right until the end of the broadcast, we're actually going to provide you the SPX expected move indicator. This is your hand-drawn SPX indicator. By the way, I'll show you exactly what I am going to provide to you. Okay, right at the end of the broadcast, we're going to give you a link to this. Okay, and what this happens to be, this is the SPX, and I have actually got moves all the way back to 2017. Okay, you will receive this as a gift. By the way, if you have no idea what this is, part of the presentation today, I'm going to explain this. I started recording SPX expected moves right when, okay, the options marketplace added not just Friday expiration, but Monday and Wednesday expiration, because I knew at that point there was going to be a dramatic change in market behavior. And what I'm actually talking about in this context, this leads directly into this discussion of 0DTE. So our gift to you today, and again, stay with me right into the end of this broadcast, hand-drawn expected moves. It's the most accurate interpretation of how option markets perceived forward risk. Okay, this is the only place you're going to get this data as well. I am the only one that has got that hand-drawn data. More than happy to share it with you. It's a $500 value. Stay with me right until the end of the broadcast today, and I'll actually give you the link specifically to be able to grab that indicator on there. Now, coming up, I'm going to go into the market, and I'm going to show you trading ideas. I'm going to show you logic, okay, that I would say the vast amount of you have never seen before. And that's one of the things I really want to hit on today is we're going to get into some trade logic. Big discussion today on trade logic. I know everybody wants to know every little nuance in here, but if you're brand new, okay, you never really traded 0DTE, or better yet, maybe you've never even traded an option, you're going to be okay today. You're going to be okay, but I want you to be able to grab big, broad strokes of logic. Don't get caught up in all the little nuances. Look, 0DTE. You know, the first thing is, like, everybody always asks, like, 0DTE, what does that mean? Okay. There are limited products being like spiders, products being like SPX. There are limited products that now offer daily option expirations. Why the hype around them? Okay. Well, why is there hype? Well, first of all, they're fast and they're furious. There's massive return potential. Okay. There's no overnight risk. I love that one only because, think about this for a second. There is no tomorrow. It's a 0DTE. That means it expires today. The term 0DTE, although it's kind of a fascinating term, the truth is, and this really is the truth kind of behind it. The truth is they're just daily expirations. They were originally called the dailies. Okay, that's what they were called. So, and again, you hold the positions for mere hours. And, I'm going to tell just a really brief story before we dive too deep into this, and hope you guys don't mind this, but I was there at the creation, literally at the meeting of the creation of 0DTE. For those of you that do not know this, early on in my career, I worked at a no-name brokerage firm. Well, that became Thinkorswim. Okay, so I worked at Thinkorswim, and the idea of weekly options, initially 0DTE, came from weeklies. Okay, the idea of weekly options. I was in the room running the pitch deck when myself and Tom Sosnoff, okay, literally pitched to the Chicago Board Options Exchange and their board the idea of weekly options. That idea came out of Thinkorswim. The product idea was sold to the Chicago Board Options Exchange. By the way, okay, most people don't know this, but I like telling stories. Originally, they were not called weeklies. In the deck that we built, they were called quickies, okay? Because, who doesn't want a quickie? Like, literally, that fell so flat with the Chicago Board Options Exchange. There's a group of, mature individuals, clearly were not. They were calling them quickies. And he's like, quickie this and quickie that. Anyway, that product was bought by the Chicago Board Options Exchange and actually became weeklies. And with that, the idea was the advantageous, product called weeklies would eventually become dailies. Okay. And here we have now 0DTE, and that's the genesis of it. And it's kind of cool though to be able to talk about it, because that was all the way back early in my career. I was a 24-year-old kid. I think it was like 2003, running a slide deck during this presentation, chipping in my 2 cents over there in front of the Chicago Board Options Exchange board. And here we are, some 22 years later, and I'm talking about it again over here. Let's get into it here. People love 0 DTE. They absolutely love it. Just some statistics over here. 0 DTE, okay? It's exploded, okay? Accounting for a record 55% of the share of total SPX volume, okay, in the quarter, which means there are more, okay, of these daily options traded now than anything else in the biggest product in the world. The SPX is the biggest product, okay, out there by far and away. The SPX is the mother of all products. Other stuff may trade more contract size, but nothing trades more dollars through it than the SPX, okay? The SPX is, ladies and gentlemen, the mother of all products. And now over half, okay, of all volume goes through. Okay, that's in Q1 of 2025, 55%, okay, of everything that traded in the SPX over there. And it continues to actually grow. The 0 DTE is actually growing. 3-year growth trend of the past 3 years, 0 DTE has expanded more than 5-fold, now averaging almost 2 million contracts daily. That is sick. It is, okay, everybody's in love with it. Even the market making firms love it. The proprietary trading firms love it. Okay, we love it. Why? Because it's fast, it's furious. Now, okay, problem is a lot of the people that are trading it specifically on the retail side, we're retail, okay, they're doing it wrong. Huge number of people that trade this product are doing it wrong. There are huge misconceptions, okay, a huge missing piece to most people's trades. I've watched every presentation on 0 DTE, and some of it is just sickening. Okay, today I'm actually going to teach you, okay, literally what that missing piece happens to be, and why it's critically important. I wouldn't trade 0 DTE if not for this, okay, and try to give you the best possible results for 0 DTE. All right. Look, the bottom line is do not trade 0 DTE until you hear me out, okay, for the next hour or so. Look at what we're about to do. I am adamant. Listen to what I'm about to say to you before we go any further. Now, okay, let's actually get into the, why now? Obviously, the 0 DTE is hot, okay? It's the biggest innovation in options in 50 years. Since the inception of options, literally, I say, how could this is the biggest, boom in 50 years. Nothing in terms of a product in options, okay, has caught fire like this since, okay, options became a listed product. Options became a listed product in the early 1970s. Literally, it's 50 years ago. This is the biggest boom in 50 years in options product. If you haven't traded 0 DTE, great. It's a perfect time to start armed with the correct strategy. Okay, if you have traded 0 DTE, but your results have been inconsistent, because that's what everybody tells me. Everybody tells me, they're like, I was making money until the train hit me. Okay, here is the consistency piece that you've been looking for. And that's exactly what I'm going to try to provide to you. Now, whatever your preferred trading style, 0 DTE, okay, can really hold a key to a very prosperous 2025. And that's exactly what I'm going to get into. So I'm going to give you just the nickel tour about me. Again, my name is Don Kaufman. Everybody has a story how they got into trading. I grew up around it. I literally grew up around it. In fact, one of the reasons I'm up here in Flagstaff, Arizona, I have a lot of family that traders and so forth that come up here in the summer. Kind of attracted me to not only Arizona, but that's how I ended up in both Paradise Valley in Arizona and Flagstaff. A lot of retired traders happen to live up here. I'm visiting one of them up here right now. So I got my start in the late 90s. As I said, I kind of grew up around it. I have family that traded. I started in the late 90s. Shortly after I actually started, I met a couple of traders. One of them was Tom Sosnoff. The other one was his partner, Scott Sheridan. They took me on at Thinkorswim, which I worked at from 2001 to 2015. I was an executive by 2007. We took the company public in 2007, eventually selling the firm to TD Ameritrade. It was a pretty significant deal. It was just under $700 million. And that was actually during the financial crisis when we actually sold Thinkorswim, which was a public company, to TD Ameritrade. I stayed on with TD Ameritrade for 5 years. 5-year lockup clause was my deal. It was actually a great deal. When I exited, by the way, literally 5 years and 1 day later, I exited from TD Ameritrade. had to take off almost a year, and taking off that year, built TheoTrade, and we launched TheoTrade ultimately in 2016. And a lot of what you guys are going to hear today comes from the experience, the knowledge of not only having been a market maker, but really one of the most insightful areas of my trading career. Okay, I got to see everybody's order flow for the better part of 15 years. It means I got to see everything you do. So no matter what you might say, oh, I did this or I did this, people, okay, I've seen it all. You ain't going to surprise me on anything. I have seen it all. I actually ran risk for a period of time also at Thinkorswim, which is a pretty wild job because you get to see the worst of the worst accounts. And again, what you're going to learn here literally comes from watching billions of dollars of other people's mistakes, but more importantly, the knowledge of what works best specifically for you, for retail traders. So let's get into it here. By the way, I still do some TV appearances. I just got off. This is CNBC, just the most memorable one because it's pitted against Kevin O'Leary. I just actually got off Charles Schwab TV. All right, 0DTE, winner. This is actually this week. You know, when I put together like a slide deck, I hate putting together like, everybody's like, oh, you got to put some winning trades in there. Okay. I'm only putting stuff that's like really recent. Okay. The only ones I care about, like, who cares where you were a month ago? I don't even care about that. Okay. It's right now. And people ask for, the track record here and track. I have all of that. Okay. But what matters is here and now. Can you function in this environment? This is actually a 0DTE trade that I did live in the chat room. It's 589 put. This one is actually done on what? 6/2, which is Monday. Every $148 invested, I got back 300. It's 103% return. This is actually the one I did yesterday. Okay, yesterday I actually did a trade in there. It was the 596 put. Notice anything different? I mean, like, look, it's basically the exact same thing. So this is a 0DTE done on June 3rd. Every $66 invested, I got back 134. Okay, you could have done as many contracts as you want. Instead of doing, $66 worth, you could have done 10 contracts, which is $660. Okay, let's get crazy, which should have been $1,000, or $1,340 return. So 106% is still 106%. This is a JP Morgan going back a little bit. As I said, I'm not that into it. This is actually a cool one too. This was actually in the extreme of the volatility. This one I actually did one in here, the XSP. The XSP is a mini version of the SPX. Okay, and this is a spread. I turned $218 into $850. Okay, it's 290% return in here. By the way, I don't care about the return. What I care about though is that you only had $218 at risk. Look at the date. That's April 8th, one of the most wild days in modern history. Okay, and we actually scalped in a 0DTE. Okay, for almost a 300% return. That is pretty cool. That one I actually am, proud of because that's exactly what I'm going to be teaching today. Like, I'm going to show you exactly what I did on Monday this week, on Tuesday this week. I might even be able to put a trade on while we're live here. Okay, but I want to show you exactly what I did. So for those of you, okay, brand new to this, what is 0DTE? Just a little bit of a refresher. By the way, the refreshing is going to be done here in a minute because we got to get into strategy, right? So 0DTE, okay? 0DTE basically means, okay, the option contracts that expire on the same trading day. Monday has an expiration. Tuesday has an expiration. Wednesday has an expiration. Okay, every day is an expiration day, and their time value just it erodes, right? Okay, because today's expiration day. One thing I do remember very vividly is I walked down on a trading floor. I walked down to a trading floor in 1998. In the summer of 1998, 3 weeks out of college, I went from ramen noodles to Chicago, like literally in 3 weeks, right? And I was originally clerking. Somebody showed up to work late and still intoxicated, to tell you the true story. They ripped his trading jacket off, fired him, gave me a trading jacket. Boom. That's how I got started. Okay. So I was, in Chicago for such a short amount of time. It was, again, kind of a cool experience in there. Anyway, I remember somebody on the floor, on an expiration day, literally telling me, okay, they were like, oh, it's just every day, if just every single day, okay, were expiration, They'd be like, this would just be like, it'd be like Disneyland every single day. And I laugh about that because I remember from like 1998, I'm like, what's this guy talking about? It's like every day is expiration. Expiration was such a hectic time on the trading floor. Okay. And now every day is literally expiration. Traders use 0 DTE for very short-term exposure, often targeting intraday moves. That's important. Okay. Bear with me here for 1 second. So when you look at this, okay, you got to understand we're going to be short term, we're going to be fast, we're going to be furious, but we're going to substantiate an extraordinarily small amount of risk, okay, and have the possibility of some massive returns in here. And that's where we're actually headed. All right, because these trades expire literally in hours, 0 DTE positions can quickly yield profits or losses. I don't mind saying that. Small moves in the underlying can lead to large percentage swings in premium. So you guys ready to really get into it now? Because what we're going to do first, before I get into 0 DTE, okay, people spend too much time in the, tied up on a trading platform, okay? People spend way too much time in here, okay, looking at option chains and so forth. What you basically have in here is an option, and I'm actually going to close up this left side bar. Though I hope you guys don't mind. I'm going to go live into trading applications immediately. So I use Thinkorswim, I use Tasty, kind of use them interchangeably, right? I kind of go back and forth. But if you look at 0 DTE right now, all right, let's get crazy. Okay, here's an option, basically trading. It's what we call an at the money option. It's trading for 63 cents. If you were to buy that option right now, what would be your risk? Okay, if you were to just buy this option right now, be 64 cents or 63 cents, what would be your risk? Okay, your risk substantiates at that price point, and that's it, right? And in this case, again, I'll lock down, no, I'll say 63 cents, but that would be the max risk that you could sustain. That's it. And people are worried about, all kinds of things right now, but timeout. When I say they're worried about all kinds of things, well, what if I forget about the trade and it goes to expiration? Well, what about the day trading margin rule? By the way, I'm going to tell you right now. First of all, to be able to trade these things, okay, you can have any size account. Any size account. You can have a cash account. You can have a margin account. You can have any size account. Do not dare tell me, okay, the day trading margin rules are going to lock me down. You can circumnavigate day trading margin rules. You don't have to necessarily trade spiders, but I want you to understand something before we get into this, okay? Because I don't want to fight later about it. You, okay, do not have to have any day trading margin rules. There aren't any in certain products, okay? And again, that's logistics stuff for later. That's logistics. I don't want you to worry about logistics. I want you to assume that if you have $2,000, okay, in an account, that you can actually trade 0 DTE. Is that a fair assessment? Okay. Is that a fair assessment? Okay. Because people also like, I don't want to trade the spiders because then you trade the XSP. Like, look, we'll get it done one way or the other. Like, try not to make this harder than it has to be. People get caught up in the wrong crap. Okay. What about commissions? What about commissions? They're next to nothing. There's freaking firms that the commissions are nothing, right? Some people are like, my brokerage firm won't let me even trade 0 DTE. Well, guess what? You have the wrong brokerage firm. That's absolutely ridiculous. I've actually heard people say, my brokerage firm won't let me trade 0 DTE. Newsflash, get a different brokerage firm. Like, what is wrong with people? Okay. I actually heard that just the other day. Somebody said, my brokerage firm won't let me trade it. Okay. Here, I'll put the link right into the chat rooms for Tasty. Tasty will let you do whatever you want. Okay. Let's get crazy. But I don't want you to get caught up in the logistic nature of it. What I want you to focus on, don't even worry about right now. Don't even worry about, like, people are like, oh, the cost of the option in here. Don't worry about it, okay? The first thing we have to do is talk about the options marketplace, okay? We got to talk a little bit about the options marketplace and some expected moves. And I want to bring you into this because what options are, okay? And before we actually get in and we're going to trade, because people want a setup, right? I get it. People want a setup. And when I say a setup, they're looking for specifically, okay, like, well, how am I supposed to know the stock is going to go this way? Or how am I supposed to know the stock is going to go that way? That's exactly what we're going to talk about, okay? We're actually going to talk about, okay, also advantages, disadvantages in the setup. Okay. What if I told you this? And I'm going to start with this. Okay. I don't care whether you're right or wrong directionally. Full stop. I don't care whether we're going to be right or wrong directionally. You could be bullish, you could be bearish. Okay. You can go out there and you could miss 2 or 3 times. Okay. It's not going to make a difference. What we're going to do is we are going to set up, when I say that people trade 0 DTE wrong, they miss one of the biggest points of 0 DTE. Okay. The advantage of 0 DTE, the edge of 0 DTE is completely, okay, overlooked. Okay. Today, I'm going to give you 2 distinct ways to give yourself, okay, an edge in here. I want to be very clear. Today, I will give you 2 distinct edges in here, and everybody, okay, needs to listen and to tune in to what these edges are. The first one that we're going to talk about, okay, 2 distinct edges, meaning that I'm not just going to say like, oh, the MACD and the Fibonacci cross and then it's time to get in. That crap is ridiculous. Okay. This marketplace could get tweeted on any second. What's tweeted on? It's just as bad. It's like getting crapped on. The market's going to get tweeted on. By the way, that could be good or bad. Take it for whatever it's worth. But you got to understand, okay, that's the world that we're living in right now. Yeah. Okay. It's a tweeting world. I just live in it. So let's get into it here a little bit. Now, everybody okay? Everybody okay? All right. Like somebody was like, oh, this brokerage firm won't work. That brokerage firm won't work. Okay. The first one we're going to talk about, right, is going to be expected move. Now, those of you who think you know expected move, I'm going to actually give you a different look over here. Options, okay, give you a market of foresight. Looking back is a great way and it provides plenty of insight. Okay. But if we can only look forward, produce foresight, enter the options market. Options are handicapping forward risk. Okay. But before I go any further, okay, you got to understand something. Options are putting a price tag on risk today, but they're also putting a price tag on risk when? Tomorrow. What's coming tomorrow? 0 DTE. What's coming the next day? 0 DTE. Okay. So I can already figure out what the apparent risk is for tomorrow. Does that make sense to everybody? How do I do it? Okay. Again, the idea today is to give you, as I said, 2 distinct edges in your trade. Close this up for a second. What I'm actually showing you right now, this is June 4th and you see June 5th. In fact, let me even change the color. Let's get really crazy in here. Let's change the color. Right in here, there's June 4th, okay, and June 5th. Everybody comfortable? Everybody see that? Okay. Cruise over here, right there, okay? I want you to look. Today, there's still $1.78 of movement left, okay? That is not important. What is important? Look at tomorrow. What's the movement being priced in for tomorrow, okay? I'm already figuring out tomorrow. Why? It's 0 DTE. But Don, I thought you were going to trade today. I am going to trade today, okay? But I'm already going to help you out here by looking at what tomorrow is. Tomorrow, we have plus or minus, okay, a $4.32 move priced in. And that equals what we term EM, which stands for expected move. Expected move. I don't know which way the market's going to go tomorrow, but I do know that the market thinks it's going to move $4.32. Okay. Now, you can look at that in a lot of different brokerage platforms, and that's fine. Now, don't freak out about the logistics. Understand big, broad strokes of logic in here. Now, let's go to the SPX, the mother of all products. The SPX is projecting about a $40 move. Do you notice the SPX and the spiders are about one and the same? The SPX is 40, the spiders are 4. Why? Because the spiders are 1/10 the size of the SPX. As I said to you, I don't want you to get all tied up in the logistics of it. Now, okay, all I want to do over here is that I want you to understand that options are already kind of handicapping what the market is supposed to move for tomorrow, okay? So what I'm going to do is I'm going to take you into expected moves and just give you a quick scenario here, okay? We're going to give you a kind of a brief scenario, and All you have to do is understand some of the logic in this, and then I'll take you through all the little nuances a bit later. Okay. The logic is a really simple one. So we're looking at a marketplace. Okay. And this marketplace is right here. Let's say it's a $100 stock. Okay. I'm going to make this nice and clean. My handwriting, not so good. I could have been a doctor. I could have been. Okay. It's a $100 stock. Let's start with that. Okay. And the expected move equals plus or minus, we're going to make it $4. Okay. That is a 0 DTE expected move. That's a 0 DTE expected move. It says that this $100 stock, and by the way, we're going to call the stock, as I always do, I call it stock, right? Okay. This $100 stock can move up. Okay. That's a plus, up $4 or down $4. By the way, I'm using $4 because $4 is exactly what the spiders just said. Are we okay at that point? And people go, excuse me, where did the $4 come from? The $4 actually came from the option chain. I just looked at the option chain, and the option chain said the 0 DTE had a $4 move priced in for the day. Forget about what it is right now. I want to know the entire day. Today, literally today, the spiders had a $4 move priced in. What's the actual move right now? Next to nothing. Okay, it's okay, right? So you have this $4 move priced, which basically means, okay, there's a very high probability that today, okay, we're going to move within a $4 range higher or lower. Does that make sense to everybody? All right? Because again, what we want to do is we want to base a setup, okay, on some mathematics. So 0 DTE, $4 move. Now, I can take you literally into a live trading application right now, and I'll point out to you that tomorrow's move, literally, tomorrow's move in here, okay, is at about $4.30. Half dozen this way, half dozen the other way, whatever. Okay, so let's say we're already promoting this for tomorrow. Now, once you have that expected move, and again, you want to be able to trade these 0 DTE, okay, I want to give you a little bit of an edge. Okay, what is the expected move? So what the expected move really is doing and what it's kind of measuring in here, the expected move, right, is approximately a 68%, okay, indicator. And you're like, what? Where'd the 68% come? Expected move is standard deviation. I hate to use the term standard deviation because everybody freaks out. What it basically says is they say there's a 68% chance of staying between $4 to the upside and $4 to the downside. By when? By expiration. When's expiration? Today. So you have a $4 move, we can go up. We have a $4 move, we can go down. There's a 68% chance of staying in that range. You go, excuse me? What happens the other 32% of the time? Okay. I'll tell you what happens the other 32% of the time. The other 32% of the time, okay, the marketplace gets crazy, okay, and rips outside of these. I lost my little pen. The market gets crazy and rips to the upside or rips to the downside. You comfortable with that? That happens. Crap happens. Now, the first step in the 0 DTE, here's what we're going to do. Okay, here's what we're going to do. We're going to go in and we're going to trade 0 DTE. And the premise we're going to trade 0 DTE on, okay, is this. We have a $100 stock. The market opens really, really strong. I'm actually going to give you the exact setup that I used the other day. Literally, this is the setup I used yesterday. This is the setup I used on Monday. You saw the trades a moment ago too. So I don't mind explaining exactly the setup that I used because everybody goes, what was the setup for that? The setup on Monday, 0 DTE put. The setup on Tuesday, 0 DTE put. Okay. I'm giving you the exact setup I used. The setup for the trade, though, ain't going to make you money. It's going to be the full Monty, and I'm going to show you exactly how to do that right now. Okay. So when I take a look at this, what happened on Monday is the market opened and opened strong. Okay. Plus $4. So right out of the gate, okay, right out of the gate on what? On Monday, boom, we moved right to the expected, meaning that we opened up here. Now, once you're at the edge of expected move, the market's holding on okay, by a thread. Here's actually a really cool thought. So your expected move this day equaled plus or minus $4. Now, it opened up basically $4. Now, I have a question for you. Can we move further than $4? Can this market move further? Look, it's already up $4. It's an expected move. Okay. Can the market actually move further than up $4? Anybody? Anybody? Okay. Of course it can. It can definitely move more than $4. Let's get crazy. It can even move up $8, but at $8, that's 2 standard deviations. It's possible, it's plausible, but from a probability standpoint, it's not nearly as likely. Am I right? Okay. So what you actually get, and it's kind of cool to ask this, what you get is a little bit of statistical edge in here. What's the statistical edge? We already moved up to $4. I ain't saying that we can't go further. Okay, we can go up 12. I've seen us go up 12 recently. Like I've actually seen us recently all the way up here. Okay, when I say all the way up here, like I saw us move up recently, up $12. You realize the occurrence of that, like, this is 95% of all occurrences. Okay, this is 99.999% of all. Like, that's crazy talk because we were up like 120 points in the S&Ps, and it's happened a lot lately. But routinely, you know what we do? We go right to the upper edge of the expected move. And if you do it early in the day, there is a damn good chance, okay, at some point during the day that we can actually have a reversal. By the way, vice versa is true too. I've done this one to the downside recently, okay, where we actually rode it to the upside. So you hit your 1 standard deviation, okay? We buy a put at that point. Why? Statistically speaking, it gives us a little bit of an advantage. It gives us an advantage mathematically. Why? If I did this trade, don't worry about one time. If I did that trade, we hit the edge of the standard deviation, okay? And if I did that trade 50 times, okay, we're not going up 8. Even if we do go up 8, I have limited risk, okay? We'll often either stay at the $4 or revert back down to some degree throughout the course of the trading session, okay? It's a very, very simple quantitative trade. It is not based on technicals in here, okay? I'm not basing this on technical analysis. I'm not basing it on what I think. I'm basing it on a market of foresight. I'm basing it on an expected move, okay? Now, let's go live to the marketplace. By the way, this is only one of the little nuances. Like, I'm not basing my whole trade on this idea like, and then we go up, and because we went up, we should come back down, okay? That's ridiculous. I'm using the daily expected move, okay? I'm using a daily expected move to handicap forward risk. I'm using it because the option marketplace, okay? The option marketplace, like here in the spiders, there are tens of billions of dollars, 5 million contracts traded a day. Well, 5 million contracts traded a day. This is a stupid day. It's not even moving. And we're trading 5 million contracts. Take a look over at the SPX. The SPX, okay? Look at this. Almost 2 million contracts traded today on what? Absolutely nothing. They're all trading the same crap. They're all trading off this expected move, okay? And the expected move is not like a self-fulfilling prophecy. The expected move, it's an average of option pricing. That's really what it is. It's an average of option pricing in here, okay? So I'm going to come back in here and make a quick point. So the market right now is just kind of meandering. It's not setting up for much right now, which is okay. It's okay. There's going to be certain days the setup is not perfect, okay? But I'm giving you just one, okay, to me, one of the statistically best setups that you can get into. So let's give it to you. Let's give it to you now in a live market condition. I'm just going to go ahead and tell you right now. The SPX, last night, the SPX was projecting a $40 move, okay? So when I say I'm going to give it to you as straight as possible, the SPX last night, okay, expected move was plus or minus $40. That translates to spiders equal expected move plus or minus $4. Got it? So I already know we're expecting a $40 move today. Timeout. Actual move right now is $1. Are we disappointed? No. But I'm going to tell you something. These expected moves on a day-to-day basis, okay, are almost always achieved. Statistically speaking, if it says we're going to move $40 or it says we're going to move $4, almost unequivocally, we hit that $4 move higher or that $4 move lower. Okay. Consistently, these things do, in fact, set up. And what we're trying to do in this case, okay, is take advantage of exactly this. So let me give you an example. The last 2 days, this trade set up beautifully. Here we are, okay. The spiders, for instance, are trading, okay, at 597. Let's say that the spiders rallied up $4 today, right in this neighborhood here, okay, which takes them to what? 601. So if the spiders are trading then at the 601 level, I'm going to fix that so everybody's comfortable with it. The spiders are trading at 601. I might be able to go out right then and there and buy a put. Okay. Why would I want to buy a put? Statistically speaking, okay, there's a higher probability we either stay here or revert back down during some portion of the trading session. Okay. Remember, there's always a chance that we're wrong, but I'll take that statistical means any day of the week. Now, okay, that's facet number one. Time out. I'm going to stop right there. Is everybody comfortable? Okay. Now, somebody said, do you have a daily expected move indicator? Well, we actually track those considerably. And that's something I'll mention a little bit later. Again, I don't want to get caught up in the logistics of this. Okay. So this is actually kind of cool. Now, first thing you got to understand, that's only one of the setups that I use. That's only one of the setups, but that is the setup that I used the last 2 days. Okay. I mean, literally, that's the setup I used the last 2 days in here. In fact, this is the spiders. This is what I traded. So if you want to see exactly what I did, just these are 1 minute charts. Let's go to a 10-minute chart and let's just back up for like the last 3 days. Okay. Show you exactly what I did on, obviously on Monday, during market hours and so forth. What's actually crazy about markets is we resolved a little bit higher. Okay. We ended up resolving a little bit higher. Okay. But some really, phenomenal moves in here. So markets in both days, markets in both days actually traded considerably lower, and then ultimately rebounded. But as I actually just showed a moment ago, and I'll come back right to it, even though markets rebounded, they were still enough to set these trades up. Both of my trades, I just want you to know, both the trades I did on literally on Monday and Tuesday are what? They're bearish trades, okay? The reason I'm showing you that they're bearish trades because I find it amusing. I find it amusing because the days ultimately traded a little bit higher, okay? This is yesterday. That pullback right here, was enough to make 100% because we traded right to the standard deviation and literally pulled back, okay? The exact same thing is true of the prior trading session where we actually traded standard deviation and then ultimately pulled back, okay? That's all it really took, okay? In and out. Now, you kind of have the setup where we actually trade the standard deviation, the expected move. What's setup number two? Setup number two in here is actually pretty simple. Today, I'm going to use the puts because I find it just easier to explain this. I mean, we could use the calls. Like if you think we're going to trade higher today, look at the premium in here. The premium is 50 cents, 50 cents. So if I go out and I buy this, and I'm going to lock down the price over here. By the way, I love talking about this with 50 cents, And this, by the way, this trade setup couldn't be any better to explain than right now. This is an unbelievable setup for it because very often it's a little bit more ambiguous. This is not ambiguous at all. Right now, you can go out, and you can buy an option for 50 cents. The max risk for one contract would be $50, period. So you trade for $50 plus your transaction costs. How much can you make? Today, the expected move is still $1.65. So the market's still anticipating a $1.65 move, but that's not the expected move to go off of. You should actually consider the full daily expected move, and the full daily expected move is a full $4. And if this marketplace starts to move right here, this marketplace is still capable of moving a full $4. You use the daily expected move, not that little monkey right there. Not that little monkey right there. Use the full expected move. And if we were to move $4, this 50-cent option could be worth $1, $2, $3, $4. This thing could actually be worth upwards of $3.70, minus the 50 cents it costs you to get into the trade. You understand that 0 DTE affords you one of the most incredible opportunities that everybody misses, okay? The idea of 0 DTE, okay, is a really simple one. It affords you the opportunity. In fact, I'm going to go to the charts and I'm going to lay this out for you guys, okay, as clean as I possibly can. It affords you the opportunity to look at this as almost like a coin flip. Do you remember earlier I said, I don't care whether you're right or whether you're wrong, okay? We're going to have heads and we're going to have tails. I'm literally going to make this a coin flip. Heads, okay, and tails. Don't care whether you're bullish or bearish. What actually happens in this particular case is, okay, when I say heads and tails, we have a trade where we're going to risk, let's say 50 cents. You might be able to make, let's put commissions and everything in here. You might be able to make as much as $3 on one trade, okay? So if tails you're wrong, you lose 50 cents. You lose 50 cents, okay? You lose 50 cents. You only really have to be right in here like one time to compensate for all the losses. One of the biggest edges afforded to people, specifically trading, okay, 0 DTE, they miss. As I said, people do this wrong, okay? People are trying to get in and out of 0 DTE very quickly for profitability. That is the wrong strategy to take. You put 50 cents at risk, period. There's no stop orders. That's ridiculous crap. You are the slowest person in the marketplace. Every proprietary trading firm is faster than you, okay? Every market maker is faster than you. You know what your edge is? Knowing that your risk is 50 cents. You know what your other edge is? Did you know, statistically speaking, that markets close where? Where do markets typically close? At highs or at lows of the day. Why on earth would you try to get out of strategies early? Put the thing on for 50 cents, ride that pony till right before the close. I don't care whether it's a call or whether it's a put. There's a damn good chance that we're going to close at the high of the day or the low of the day. And again, you don't have to be right that often. You just go out and basically, like, if you think the marketplace is going higher today, and I'm dead serious about this, if you think the marketplace is going to go higher today, okay, listen, this is not going to be perfect. This is not going to be clean. This is a live example here, okay? Boom, purchased, okay? Just buy it, be Captain One Lot. Go out there and run around with your little cape on and go, Captain One Lot rides again. And I'm fine with it. I don't care. Okay, I don't care. But I'm going to tell you right now, I just paid 43 cents, okay, for a shot at what? This thing could be up $40 by the close. How do I know that? Because yesterday it said it was going to move $4. It's good enough for me. It's good enough for me. Okay, what happens if I'm wrong? I'll do the same thing tomorrow. Okay, I'll do the exact same thing tomorrow. What I'm trying to do is establish edge. By the fact that you only have like 50 cents at risk. In my case, I have 43 cents at risk. There could be, $2, $3 of upside. You don't have to be right that often. You just got to keep showing up and taking swings. One thing I constantly argue in this business, stop with this crap that you have to be right, okay? And if you're not right, it's not going to work, okay? Why don't you go out and risk 50 cents? And don't dare sell a 0 DTE options, okay? You sell 0 DTE options, it's the end of you. Anybody that actually promotes that crap, you have no edge in doing it whatsoever. Mathematically, you will die, okay? You got to be on the buy side. And the thing is, you got to be on the buy side and hold the position. If you're going to be bullish, hold the position to close to the close. If you're going to be bearish, hold the position to close to the close, okay? You realize these things you can actually hold through expiration. If you actually trade something other than spiders, you could trade XSP, hold it right through expiration. It's cash settled. You don't have to worry about getting called stock away or put stock. You don't have to worry about any of that crap, okay? This business is a lot easier than people think it is. Look, this is what people need to do with 0 DTE, okay? I just showed you, like, literally yesterday, I was wrong and still made money. I was wrong on Monday and still made money, okay? In this particular context, there's two edges I'm trying to give you. One is a setup. The setup is we trade to the edge and you pull back. The other setup is you have to pick the right option in here. You pick an option for 42 cents. By the way, I'm not always at the money. Pick an option, though, for 40 cents, okay? Who cares if it actually expires worthless? Oh, I had a losing trade today. Don't worry, I'll get you again tomorrow. Oh, I had a losing trade the next day. And on the third day, you make $3, $4, okay? You make an entire living off of going out there and not being right. Make a living, okay, off of going out there and just showing up and taking the 0 DTE shots, okay? Let the market do the job for you. The keys in here, okay, are how every trader is going to get that edge. Traders, okay, without any type of forward-looking edge are flying blind. There's so much more to this. And I always run out of time when I want to get into this, but there's so much more to this. There's a lot of little nuances, okay? And in those nuances, that's exactly what we do, of course, in the Mega Mastermind, okay? The Mega Mastermind, introducing the Mega Mastermind. Now, this is the second iteration of the Mega Mastermind. It's $2,000. It's a 12-week strategy-focused mastermind, okay? In this Mega Mastermind, for the first time, ladies and gentlemen, we will have a session exclusively on 0 DTE. There's people that have been through the Mega Mastermind before. By the way, this Mega Mastermind, this is only a second iteration, only the second time I've actually run it, okay? The first time, okay, the people actually tell you that went to it absolutely loved it, okay? But now I'm actually going to add a section specifically on 0 DTE and the various strategies. Because if you're listening to this today, you're like, well, that's good, but what if this? What if this? What if this? How do I select the right option? What's the right setup? What are the other setups that you use? All of those questions and many more. By the way, that's only going to be 1 week of this. It's a 12-week strategy-focused mastermind, okay? It's just me, and you get me for 90 minutes weekly. It's literally like a full-blown class every week for 12 weeks. Yeah, we record everything, okay? And the one thing, though, that I really stress in this mastermind, okay, is anything that I talk about, I trade. We send out alerts during the mastermind. So don't sit here and tell me this is just going to be education or it's just going to be this, okay? We trade during the mastermind, and we traded really effectively in the previous mastermind, really effectively, okay? And I'm actually going to show you exactly the trades in here. Each week, we have a 90-minute, okay, interactive session where it's literally, okay, I have about an hour and 10 minutes of pure education. The rest of the time is a little bit of Q&A, answering questions, some live trading. The next mastermind kicks off June 12th, okay? People look at the price tag of $2,000. You're going to learn so much. It's so much deeper than anything else that we offer here at TheoTrade, bar none, okay? You're going to look at this, and by the way, people that go to the 12-week mastermind that just went to it, okay, over 50% of them have re-enrolled for the next mastermind. Okay, we don't even have that many spaces available in here. We do cap this. It kicks off June 12th, 8 a.m. Pacific time. Okay, with the mastermind, it has unlimited priority email access. We have access to all the archives, live trading alerts. I'm going to talk about the live trading alerts in a second. Okay, you can go to theotrade.com/mega and enroll for it. Now, before I go any further, the expanded curriculum, obviously I'm going to talk about 0 DTE, in-out spreads, okay? In-out spreads, like 0 DTE is obviously one of the additions in here, okay? And by the way, you haven't seen anything yet, so stick with me. Stick with me here for a moment, so we're going to get in and we're going to put a 0 DTE session in here, okay? We're going to do in-out spreads. And in-out spreads, what I do with in-out spreads goes deeper than what I can do in the class curriculum. So I've got classes that I've done for the past 10 years here at TheoTrade, okay? We go deeper in out spreads than we've ever gone before. We get into catapults, okay, and a variety of different catapults, Christmas tree spreads. By the way, Christmas tree spreads was the biggest hit of the previous mastermind. We hit, okay, 3 of these trades. We hit 3 Christmas tree spreads in the last 12-week mastermind, okay? Back spreads, SPX butterflies, we also hit a couple of those, and some earnings flips. Okay, this is just a smattering of what I'm going to cover in the expanded curriculum in here. Okay, this is a winner. This is in the spider. This is a Christmas tree spread. So the trade was actually put on for just over a month. Okay, in one of the most volatile markets in modern history. Okay, this is a $1,445 profit. That's 1 unit. Okay, the next trade in here is a $1,000 profit. That's 1 unit. This one's actually put on in March. The next one in here, okay, is an $1,186 profit. Okay, those 3 compiled, right, obviously cover the cost of the entire mastermind. And some people are like, I can't do that in the spiders. I'll show you how to do it in an alternative product. Okay, My goal, okay, is for this mastermind to simply pay for itself. That was goal from day one of the Mega Mastermind last time. It will continue to be the goal, meaning that, yeah, you're enrolling $2,000 in here. Okay. The goal is that I'm targeting trades in the Mega Mastermind that'll potentially pay. I can't sit here and like, oh, I guarantee, look, eventually we're going to have some rough trades. Okay. Eventually we're going to have some rough trades. But the idea is that I put on trades during the course of the mastermind that finance your education for the mastermind. And that's exactly why, okay, so many people from the original mastermind have re-enrolled for the next mastermind. Okay. And again, I really think the thing, speaks for itself. By the way, also in here, my goal obviously is to pay for the mastermind. And I say if it happens again, it won't be a big surprise because my last mega mastermind made $3,348. And there's still technically one trade open. The one trade opens in Costco, it's probably going to expire worthless. I don't care. Okay. I don't care. We made $3,348 if you did one unit of each trade, period. Okay. The mastermind cost $2,000. We made $3,348 if you actually literally just did the trades that I sent out. Okay. And I hope that that's super clear for you guys. With the mastermind, it kicks off June 12th. You still get a 30-day money back guarantee. Come in, check it out, make sure it's for you. Okay. And we do this with everything in here. Okay. Because we want to make sure that you're comfortable. We want, again, people that want to be here. I don't even have to mention this to most of you. There's a 30-day money back guarantee in this though. Okay. Just to make you feel warm and fuzzy over here. But the next thing I'm going to tell you, this is important. This mastermind ain't for everybody. This is one you better strap in. Okay. Nothing here at TheoTrade goes quite as far as what we're going to do in here. And you ask anybody that went to that mastermind, and there's a bunch in here. You ask anybody that went to this mastermind, they'll tell you the exact same thing. Like, it's on. When I put this thing together, when I say it's on, okay, I'm going to push the limits of what anybody's capable of actually understanding. That's the freaking idea. Listen to the recordings on there. And I try to intimidate you. Okay. It's not for everyone. You got to invest time to build skills for life. There's crap we're going to do in here. Okay. We're actually going to go back in and talk a little bit more about volatility. Okay. We're going to do Christmas tree spreads. We're going to give you ideas that you can actually build on for years to come using 0 DTE, using expected move, using Christmas tree spreads. It is a 12-week commitment. I know people are going to travel this summer. I don't care. Listen to the recording. Actually, you're going to have to listen to the recording anyway, because like this, I speak pretty quick, right? It's okay. You can listen to the recording, shoot us an email, if you have questions thereafter. This mastermind, these are where like I bring the A game. Every week, I'm going to show up, and every week, I'm going to stretch the limits, okay, of what anybody has ever done on the retail side of this business. I do this mastermind. Yeah, it's for you, but some of it's partially for me because it gets old talking about like, this is an in-out spread. So I'm going to take in-out spreads and take you to a depth in in-out spreads that you ain't never seen before, okay? Catapult. You think you know what catapult is? I'm going to stretch and like, twist your mind around in catapults like you've never seen before. Crap that no one else does on the retail side of options. Okay. We're going to teach full blown like dispersion in this that you can do with a couple of grand in your account. Don't tell me I don't have enough money in here. Don't tell me there's day trading margin rules. Okay. That's all logistical crap that we'll cover during the course of this. And we'll get through all of that. Okay. I ask you to bring your A game. I ask you to bring your A game to it. And I always challenge people like, don't just sign up because I'm going to put on a couple trades. Sign up because you want to put on a couple trades, okay? But sign up because you actually want to do this. Sign up because you actually want to commit a little bit and you want to take this, okay, to a completely different level. That's the whole goal of like the Mega Mastermind is 12 weeks. It's intense, okay? And I want to take you to different levels. I'll teach you like the SPX. This is, of course, the expected move butterfly. Kind of one of my favorite trades to do, all right? I love hitting these things. By the way, I like doing trades where I like risk $55, okay, to make, 500. I love trades like that, right? I like to take shots. It's never been about being right or wrong, okay? It's about basically hitting a grand slam home run, okay, more often than you should. And that's what's actually cool about this. By the way, there's a couple of questions coming in here, and I'm going to answer all of them, okay? I want to make sure everybody knows where the page is, okay? It's 0 DTE D0N. I like that. It's D0N DTE. Okay. I want to also throw up the address in here. Okay, this is theotrade.com/mega. It's MEE as in Echo, G as in George, A as in Apple, theotrade.com/mega. The link is in there. As you guys actually scroll down towards the bottom of this, obviously we reiterate everything that's included in here, the 30-day money back guarantee. Okay. I believe we have, it's about 50, it's 50 seats available right now. We're going to cap. We're definitely going to cap the size of the class in here. Okay. As I scroll down in here, make sure when enrolling this, proper email address, always reiterate this, and proper phone number, because in the Mega Mastermind, okay, yeah, we might trade live. Sometimes though, I'll just do a trade like on a Tuesday. The Mega Mastermind meets on a Thursday. I might do a trade on a Tuesday. We're going to email, okay, and hit you with text notification on the trades that come out. So please understand, okay, we will trade live. It's $2,000, okay? If you need us right now, call us. And I'm checking with support as I'm actually looking off to the side of my screen over here to make sure everybody's good to go. But if you need us, call us, okay? The number on here, all right? The number on here is 623, and it's, I'm going to scroll right to the top of the screen so everybody sees it, okay? It's 623-244-5657. Again, 623-244-5657. Questions about payment, anything of the kind, okay? It's in there. I'm fairly certain in saying that in going through the Mega Mastermind, again, we had spectacular feedback last time around. And I'm going to see, okay, I'll put the link in chat. The link is in chat, okay? The link is right on, should be the right on the top of that, okay? Just making sure that everybody sees the links in here, right? The other thing I want to make sure everybody sees is, okay, yeah, just I'm making sure everybody's good and has all the links in there. Okay, so again, I want to reiterate in terms of the enrollment for it. Okay, if you have any additional questions, give them a call. It's fine. Again, call us. We're there to be able to answer some questions for you. Again, to reiterate everything that's actually included in here, it's a 12-week strategy-focused mastermind. Okay, and again, if you guys went through it, please provide feedback in here. Like I think we got some pretty spectacular feedback, and it was the first time we actually did the 12-week Mega Mastermind. And those that actually traded with me and stuck through. By the way, it was some horror during the last Mega Mastermind. We hit one of the most wild times in volatility in modern history. I mean, we traded the last Mega Mastermind right through March, April. Okay, I mean, we were right in the thick of things. One of the best times and one of the best learning experiences in there. So kicks off June 12th. Again, okay, learn it, trade it. The D0N DTE is going to be a nice addition to it. Okay, I like that. Air Cow Mega Mastermind is great. Put on your big boy pants. Okay, and that is by design. Like, I don't mind saying that to people. Like, I'm bringing my A game, you bring your A game. I get pretty excited though about doing this this particular mastermind. And every time we have like a new crop of clientele ultimately coming through it, because every single mastermind, by the way, I don't care if you can go to the same mastermind 6-7 times. Every single one of them, okay, will carry different curriculum to it. I do that because we get a lot of repeat people that come through it. Because again, the mastermind at this point, it's not just education. It's designed to pay for itself. It's designed to have trades, okay, that basically embody some of the skills that we're actually teaching. The biggest one, again, that I really paid off last time, okay, the one that paid off last time, there were literally 3, count them, 3 of these Christmas tree spreads. And these Christmas tree spreads can be done in alternative products and not tie up a huge amount of margin, right? Okay, there will be an entire session dedicated exclusively to D0N DTE. So a lot of times people will go out and they'll pay $2,000 just for a class on D0N DTE. Okay, you're getting a class here on D0N DTE plus 11 other weeks. That's, again, okay, you want to learn to trade D0N DTE, it's encompassed in this. The only place that I can actually bring the heat is right here in this for the D0N DTE, okay? As I said, the goal for it is for the entire course to ultimately pay for itself, which is exactly what we did, and then some. Okay, so I want to cover your $2,000 of tuition costs. As I said, there's 30-day money back guarantee. Okay, to reiterate, everything that's included here kicks off June 12th. 12-week strategy mastermind will include live trading in here, access to all the archives. Okay, you'll also have access to none other than myself and Todd's suite. Okay, there are 50 spots available today. Get enrolled, take action now. Now, to download the expected move indicator, okay, that's actually also found on theotrade.com/mega. So if you take a look specifically at this page, it's right here. It's right there on the page. So theotrade.com/mega. Okay. And it's hand-drawn expected moves are actually in there. Next steps. Okay. We're here to help. After enrolling, if you've got questions about, okay, if you've got questions about this, by all means, okay, shoot us an email. Okay. If you've got questions, we're here to actually answer those questions. So shoot us an email, anything you actually need. If you need specifics over here right now, call 623-244-5657. By the way, that includes, when I say specifics, I'll say this in the nicest way, okay? You don't want to pay the $2,000 up front. You want to split it up, whatever does it for you, okay? Just call us. We'll take care of it. Like the one thing I've said and said again and again is that, okay, I don't want like $2,000 to stand between you and like, you know, a market education. We'll figure it out. Okay? Don't worry about it. We'll figure it out. I can say that because I'm one of the co-founders here. So, you know, we'll take care of you. It's theotrade.com/mega. Again, everyone has a choice. You know, when it comes to options and so forth, okay, you can fast track your learning or you can kind of go slow lane, and it's okay because I really think that this is how to kind of fast track yourself a little bit. And we're going to give you the right tools and the right indicator to actually fast track everything you're doing. A little bit of Q&A over here. Let me get some of the questions answered. By the way, we're going to answer some of the questions, you know, in chat here as well. By the way, I appreciate Lewis saying I did the 12-week mega mastermind. Okay, and it was really incredible value. I actually reviewed the recording, okay, and often understood more and more each time. One thing I will tell you about, and again, this is just my opinion, but what I hear over many years of me actually teaching, okay, some of these in-depth classes, people literally said, I listened to the archive and only on the third time did I fully grasp what was going on. Okay. That's okay. And that's, I mean, you know, I speak at too many words per minute. Like I totally get it. Okay. But as I said, like, I just don't, I think people like have to understand some of the stuff that we do, we have to water down because some people are brand new here, have never traded an option before. This, okay, this, people want a game. You got to bring it, okay? And that's what the Mega Mastermind was always designed to be. It was designed to basically take it to, you know, this you know, college level kind of curriculum in here and to bend and twist your mind ways that you're like, holy crap, there's going to be some things like done in here that, as I said, are kind of mind bending. You're like, holy crap, I didn't even know you could do that in markets. I'll show you how to circumnavigate a lot of margin restrictions. Okay, you name it. And I spend time on this because I feel pretty strongly about it, you know, and yeah, we have to come out here and we have to talk a little bit about it. Otherwise, people wouldn't know about the Mega Mastermind. But this is something that I actually really enjoy doing too. Like I really like taking, okay, a topic and stretching it into a more comfortable place where you can trade it. Like taking professional level trade and like distilling it down for the retail, okay, is what I probably do best. And that's not always going to be, this is a call, this is a put. Okay, we're going to be talking about skew, maybe a little kurtosis. Oh, I'm into it. Okay, if you're an engineer, Canadian engineer, this is your baby right now. This is your baby. So anyway, I like Lewis said, I'm not a beginner, but really advanced my trading skills. Yeah, you can be a beginner. Okay, you'd be a beginner, but you are going to listen to that archive a couple of times. I'm letting you know now, you're going to listen to that archive a few times. By the way, some names are rolling in as you enroll for it. I'm just letting you know, I see you. Okay, John H from Arizona. Okay, where in Arizona are you from? Brian C from Florida, Darren O from Colorado, Grant H from Illinois, Bradley R from Pennsylvania, and Roger E from California. It takes me about 5 minutes before I see your enrollment, 5 to 7 minutes or so before I see the enrollment over here. Okay. Anyway, with that, okay. Bill was saying we took a mastermind back in 2023. Is there new? Okay. Is it really changed? And the answer is yes. Okay, it has changed. So I would say this. Okay, and I guarantee somebody in here has actually taken every mastermind. There are individuals that will come to every single mastermind that I have done since we started doing masterminds. I only did these masterminds. I never wanted to do these, but during COVID, I kind of had to because we couldn't do any more live classes, like, out in person. I've actually had clientele come through every single mastermind I've done since we started doing masterminds. And the cool thing is they'll email me and be like, I know you're covering the same topics, but you're hitting it at different angles. They're like, every single time, okay, we're picking up new skills. And that's the idea. That and the fact that if you trade with us, hopefully make your money back. It's it's a free ride. It's free 12 weeks of education. I can't guarantee you're going to make your money back because I can't guarantee what you're going to trade. But the idea is to do to just that. Okay, so Canadian engineers are not just allowed; they're encouraged. Okay, this is your baby over here. So what do you need to get started? Laptop, internet connection. Look, you can use a tablet. I would go beyond a little bit of a phone because when you're actually watching the presentations that I do, you might want a little bit of a bigger screen. So like an iPad is probably like necessary. You don't have to have the expensive iPad, I promise. Okay. It's a 12-week mastermind. The sessions run. It's 8 a.m. Pacific to about 9:30. Okay, give or take, and we start with a little bit of Q&A. Everything's recorded. Okay, what's cool about the recordings too is you can play them back at like 1.25 the speed. So get through the boring parts, get to the good stuff. Access, okay, to all the aforementioned classes are going to be provided. So meaning that I do a section on in-out spreads. I do a section on catapults. I do a section on back spreads. We're going to give you archives to everything that you need before you even get started, because the homework is like, you need to know what an in-out spread is, because I don't talk about the basics of an in-out spread. I talk about the extremes. What can be done with in and out spread? How can we twist this? How can we, roll this position forward? There's a lot of little nuances of in-out spreads that people are not aware of, and I think it really kind of tones that up a couple of notches over there. All right. So it's always held, by the way, on a Thursday. Somebody's saying what days of the week? It's always held on a Thursday. Thursday is kind of like my quiet day. So I do the mastermind in a day where I can actually, sit, think. Early in the week wouldn't be good for me, so it's usually one of the day I've got a little bit more freedom. Okay. So it's on a Thursday, 8 a.m. Pacific time. And if it doesn't work for you, it's okay. A lot of people will take this mastermind and just listen to the recordings, email us. Okay. There's also a full-blown chat room, just like the one that you're in. There's a chat room specifically for Mega Mastermind. Okay. Join Mega. You can email us anytime, receive a response within 24 hours, including trade-related questions. You have actually, like, when you enroll for the Mega Mastermind, okay, it gives you preferential treatment for email. It just basically tags your account. And when you email, it goes right to the top of the queue. So it's really nice, though, because most of the time I get back to you, within 24 hours. The Mega Mastermind, though, we usually get back to you a little bit quicker because you are preferential treatment in email. Variations of the trades we do, you can do them in an IRA, retirement account. You can do most everything with $2,000 in the account. Christmas tree is a little bit more difficult. Christmas trees is a pretty up-tempo strategy. Okay, Christmas tree. You can do lots of butterflies, though. You can do all kinds of stuff with even $2,000 in the account. All right, we can help you with your broker dealer. So if you got any problems with your broker dealer, I'll give you suggestions of a broker dealer. There are going to be 50 riskless trade spots available today. Okay, that number is because we are capping the Mega Mastermind. Okay, we are going to cap the Mega Mastermind. Look, get results, take action. Okay, enroll for the Mega Mastermind now. There's no risk. You check it out for 30 days. Okay. Again, feel free to give them a call, 623-244-5657. I want to make sure that everybody's got their questions answered in here. I'm trying to read some of the questions in here. Okay. Yeah, most of the time we do close D0N DTE, Captain Vicky. Most of the time we do close stuff before the bell. Okay. But I'll give you an example in here. if I were to trade the XSP, okay, which is SIBO mini SPX index options, okay, these, it's weird, took a while to come up, okay. There's a bad thunderstorm up here right now, so hopefully I keep my connection. These settle in cash. You don't necessarily have to close them, okay. And if you have a losing position, you don't necessarily have to close it, right? Markets right now, they're quiet, okay. They may not be though. Again, we're expecting a $40 move today, and we're expecting a $40 move plus for tomorrow. So, strap in. As long as the market's moving over here, look, there's going to be days where the market does absolutely nothing. That's okay. Okay. The 0 DTE, it's like a bunt. Just move to the next day, move to the next day. Okay. It's great. The link posted, it's under theotrade.com/mega. So that link is for the SPX indicator is absolutely in there. Look, I want to make sure that everybody gets all their questions answered. I'm going to sit in the room, in the chat rooms, answer these for the next couple of moments. But look, check it out. I think you guys will absolutely love what we're doing here in terms of this 12 weeks. Okay, there's nothing quite like this mega mastermind here. For $2,000, you guys are really going to appreciate the amount of depth in here. So take a look at it. Again, there's 30 days, no risk to you. theotrade.com/mega. Thanks for everybody for tuning in today. Have a wonderful afternoon. Bye-bye.